Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now we had that payrolls report on Friday. Didn't do a lot actually to guide whether the market's going to get a rate hike in June. Certainly the Fed members such as Dennis Lockhart and John Williams are still sort of pointing towards possibility of a June rate hike, and it's not necessarily going to be coming through with the data because the Fed has sort of focused back on the domestic data front as being the driver behind whether it's going to be able to hike or not. And the data last week was pretty wishy-washy, pretty middle of the road. The PMIs were sort of okay, they weren't great. You're seeing the Atlanta Fed GDP now forecast now coming up to around about 1.7% annualized for Q2, which, bearing in mind Q2 generally tends to be quite a lot stronger than Q1. It's still not all that great, and I think that word moderate may well still apply to the Fed statement. So we also then got the non-farm payrolls on Friday, and the headline payroll support number disappointed, 160,000. The average hourly earnings was better than expected, but certainly I think the fact that we had, the average hourly earnings was in line with expectations, but continues to sort of pick up slightly, which is a positive. But I think the fact that we had downward revisions in prior months on the headline data, it's not really going to push the doves too much towards voting for a rate hike. So I think June still looks very, very unlikely, and certainly the market is looking for 5% probability of a June rate hike. So nothing really that much likely there. So we've had this dollar strength in the last week or so, rebounding, really unwinding that dollar huge sell-off that we had previously. And is it anything more than a bear market rally is the big question. We've had on Monday morning a continuation of that move. We had a little bit more risk appetite coming through the market, so that helped to sort of correct the yen slightly more. And it really is questionable whether this dollar rally will be able to continue. But we've got a bit of data this week which might help to guide us. Towards the end of the week, we've got sort of retail sales, which the markets will be focused on, and also Michigan sentiment. Both of those sort of consumer-facing numbers have been a bit disappointing in the last sort of month, and I'd be interested to see if that sort of continues to remain the case. So where are we looking at in terms of forex markets? Well, as I said, we've seen the dollar strengthening. So we've seen a little bit of an unwind on the euro dollar. That's sort of back below that key breakout level of 14.65. It's sort of drifting ever slightly lower, sort of now not too far away from an old pivot band around about sort of 13.30. Although I think whilst it still trades above the 12.15 level, which was the late April reaction low, I still think that we're sort of medium-term positive on euro dollar. Cable's an interesting one because we've got Super Thursday this week from the Bank of England, where you get the monetary policy decision, the meter minutes, and also you get the inflation report. So a lot of volatility we could see on cable in the latter part of this week, and that'll be interesting to see the moves that we see there. In terms of dollar yen, we've had this sort of rally on the dollar, which has sort of broken through this morning above the 107.80 level. Interesting to see if that rally can continue, because I think bear market rally territory is still where we're seeing this dollar yen. And also across the other forex majors, with sort of like the Canadian loonie, which is under pressure from all the impact of the economic impact of the wildfires in Alberta, and also we're seeing the Aussie and the Kiwi under pressure ever since the RBA, Reserve Bank of Australia, cut rates last week. In terms of your equity markets, well, we've seen the correction, sharp correction actually in the last 3 weeks, starting to find a bit of support, actually, interestingly enough. Sort of Monday morning's been pretty strong actually for European equities. Again, the question being, can this turn out to be anything more than an unwinding move? You need to see the DAX sort of consistently trading back above the 61.8% fib level, 9897. You need to see FTSE rallying straight back through probably that 6,237 line, which has sort of turned into a bit of a pivot. And I suppose the positive being that the S&P 500 has sort of held on to its 2022 to 2034 support. So some interesting signs of support, but can they be sustainable would be the interesting move. And in terms of your commodity markets, well, we've seen the gold price coming back under pressure a little bit on Monday morning as the improvement in risk appetites come through. But again, it's all about the dollar and the Fed and whether the Fed is going to be able to hike rates, I think, on the gold price. Because if the Fed continues to sort of push the rate hikes out into the future, I think the gold price will remain underpinned by that, because it sort of continues the negative real interest rate environment that gold holds on to and performs well in. And the oil price. Oil has been supported by this sort of 1 million barrels of oil production being taken out from Canadian supplies in the wake of this fire, and be interesting to see if this sort of oil price rally that we've got on Monday morning can continue as this fires subside. And I suppose it depends on how long it will take the oil production to come back online in the wake of those fires. So what else have we got to look forward to for the rest of this week? Well, as I said, we've got all this US data at the end of the week, but prior to that, we've got a little bit of Chinese data. We've got the inflation for China overnight tonight, a little bit of UK data, manufacturing production, but the main focus would be on the Bank of England on Thursday. And then Friday, we've got the retail sales to the US, PPI, which is the factory data inflation, and also the Michigan sentiment as well to round off the week. So I wish you good luck in all your trading, and I'll speak to you again next time.